and we can talk more about that. But what I really want to know is what stocks you want to look at. So um, uh, go ahead and give me a ticker, and I'll take a look at it. And let me get back to where I can see what's going on here. David, I'm having a little trouble with Zoom this morning, and I'm having trouble getting it to come up. If you see a ticker, could you just tell me, and then I will put it up on the screen?
Uh, yeah. IONQ is the first one.
Okay. IonQ, a stock I'm familiar with. It's a quantum computing stock. It's one of the big four. And as you can see, it's in a nice bullish pattern here. And I'm just going to put some lines on here just to simplify things. We can see that it's got pretty good support, pretty good uptrending support. I want to familiarize you with my trading indicators real quickly so we're all sort of looking at the same thing. Um, the indicator that you see down here in the middle where my cursor is actually the MACD. And if you know about the MACD, it's a moving average convergence divergence indicator. And what it essentially does is it adds up the moving average and tells us if it's positive or negative. And as you can see, and there's different points where you want to pay attention to it. When the moving averages cross over, which is right down here where my cursor is, you can see that it's going from bearish to bullish. That happened for IonQ back in actually early March. It's actually been going up ever since. And once it crosses right here where you go from the red to the green and it goes into the positive, even though the moving averages haven't come above the positive line yet, the stock has turned. And actually, you can see this confirmed on the chart. So you see this huge up green bar here, this green up bar, and it really breaks the downtrend that had been in place since early February. So now we've got a new administration who has vowed to put more money into quantum computing. There's only 4 pure play quantum computing stocks. IonQ is one of them. And you can see it just continuously goes up. So the other indicator that I use is on balance volume. And so here you can also see that is increasing as well. It's going up, and that is simply an indicator that adds up all the volume for the day and takes the positive volume and negative volume and subtracts one from the other to see if the volume on the day was positive or negative. Then it adds that another data point, and then it eventually creates a line that tells you if more buying is going into the stock than selling. Now, as you would expect with IonQ, with it going up like this, you'd expect to see the MACD going up. You'd expect to see the on-balance volume going up, and that's exactly what's happening. When these indicators really come in handy is when they diverge from what the stock is doing. So if you started to see the on-balance volume going down, which is really kind of a forward indicator because it's sort of the vote on a stock, it's how many people think it's going to go in one direction or another. Volume, everybody really concentrates on price. Price is important, but volume is really the impetus. It's the power. It's the oomph behind a stock's movement. If you see that starting to turn down and the stock still going up, that would be a really good time to take profits. What I'm seeing with IonQ is that it looks like it's going to continue to climb. So this is a good play right now. Obviously, we've got resistance overhead at 45. Not a lot of resistance until then. We're going to see a little bit of resistance in the 37 area. At 32, it's got more upside. This looks like a good play. What else do we have, David?
Uh, AMD.
Another favorite. I was just looking at this past week to do a bullish position on, and um, we probably should have done it, except I don't think we would have gotten filled with this huge gap up right here. So one of the problems that I have with this kind of price movement. So you see, we're starting from a low here, and we really have a nice, good steep uptrend. The problem that I have with trading a stock like this to the upside is that it's deviated quite a bit from the uptrend. So if it was still steady along this path, just a little incrementally going higher, like you're stepping on an escalator, I would like to trade more. Like we just saw with IonQ, that's a really steady upward mover, and it looks like it's got more to go. When a stock really breaks out like this, so we see it's going along the trend, it's going pretty well, and then we have a big gap here, a retracement from the gap, another up day, and then we have a huge gap over resistance here at 115. You know you're going to see some retracement. You're going to see some retracement at least to fill in the gap, and probably a little bit more than that. Might not make it all the way back down to this trend line, probably won't. But I would consider taking a trade, a bullish trade, somewhere between below 112 into the 109 range, where you can get a little bit better deal. And there's a possibility of that happening, particularly when we look at these indicators. Excuse me. So we see that the MACD is sort of maxing out. It's getting pretty high up here. The histogram is getting as high as we can see back in the history. And the on-balance volume was going up dramatically, and now it's starting to turn down a little bit. So I think we're going to see a little bit of a pullback in AMD. I think it's still a fantastic stock. It's a great stock to go long, a great bullish stock. But I think we're going to see, if you want to get your best entry point, I think we're going to see a little bit more retracement. What else do we have, David?
That's all so far. So
Okay,
you
that's okay. Let's take a look at and when you get a ticker, just let me know, and I'm happy to talk about it. And so just until we get another ticker, let's just take a look at a couple of the plays we did this past week. So I do for our subscribers, I do an update on Tuesday night, so you can place the trades Wednesday morning. So and I'll just talk a little bit about our strategies so you can get a feel for that. So this is obviously the S&P 500. That's the big kahuna. That's the one we all look at. That's a lot of the time what people refer to as the market. So let's get it down here where we can take a look at it. So this is my commentary. And what we've got here is two very strong levels of support, horizontal support. And we do have a little bit of a pullback, just like we'd expect once you saw this big gap higher. And I think that this pullback is probably going to take us back towards this uptrend line. That would be a really good place to get long again, to do some bullish trades. And so our main service that we do is we sell credit spreads. And the reason I do that is because they're so darn forgiving, and they create some really substantial income coming into your account. So if you want to do more speculative trades, more directional trades, that's great. But it's really nice to have this base of cash that's coming in, kind of constantly replenishing your account every week. It's just a nice way to go, particularly if you have a losing trade or two in your more speculative trades. So what we would do on something like this is we sell and if you haven't done this before, it's super, super cool, because it's so safe and because it's so forgiving. But in this case, we're selling a 56.75 put, and then we're hedging that with a 56.70 put. And we've got our target set on that at 90 cents. We typically sell 90 cents to $1. Sometimes we get a little bit more than $1. So if you're selling a $5 spread and you take in $1, and that dollar is yours to keep no matter what, that means you can only potentially lose $4 on that spread. So we set these spreads up so that we have an 80% chance of winning it better. This one actually has a little higher probability of that. And if you get $1 on a $4 risk, you're getting a 25% return, but you have an 80% chance of winning. So $1 on a $10 or excuse me, 10 contracts is $1,000 into your account. We put these trades on every single week, and this looks like a good one. And we've been actually selling ever since. So the market really fell. We had a huge up day, a huge bullish up day, and then it came down again. Once the S&P 500 exceeded the top of this green bar right here, excuse me, we went totally bullish. So we've been selling put spreads ever since. When you have a trending market like this one, it's kind of like printing money. So what I like about it is there's very little babysitting of the position. We set stops at our sold strike at 56.75. So we're out of the trade if we need to be with minimal losses. And other than that, you just have this money coming into your account every week. We typically let them expire worthless. And you glance at your trade, but what's really cool about this is if you're used to short-term trading, it's a lot of people with some good technical analysis background can identify good entry points. I think the very difficult thing to do is identify good exit points. When do you get out? Do you hold on for a little more profit? Or do you get out now? If you're losing on the trade, do you hang on hoping it'll turn around, or do you just get out immediately to cut your losses? These are decisions that traders typically really agonize over, and I get it because I've been there. They're tough decisions. If the stock doesn't do what you thought it was going to after you get out, you're kicking yourself for that. So what I love about the strategy, and the reason it's our bread and butter, is you never have to worry about when to get out of a trade. It just happens automatically for you at expiration. We put on the trades Wednesday morning for the following Friday. So not that Friday, but the following Friday. So it turns out to be 9 calendar days and 7 actual trading days. And with time decay in your favor, selling out of the money, selling against the direction that the overall trend is, you have just a really massive probability of these trades working out. I wanted to show you
Uh,
this.
we had a few more.
Do we have another ticker?
Yeah.
Great. What is
Um,
it?
First one, I'm not familiar with TSLL, maybe.
TSL.
TS.
Right. Direction Tesla Bull.
Oh, okay.
Okay. So this is kind of a classic pattern, and it's a bullish pattern that I actually really like. Let me see if I can draw some lines here. First of all, we've got the MACD going up. The MACD is bullish. We've got the volume going up. We've got a little bit of a pullback today, kind of like the volume on this one. But here's what's interesting about this. So this is kind of your classic cup and handle. And we don't quite have the handle yet, but we've got the cup. And so this is sort of a cupping pattern, and it's a long bottoming pattern, and it can actually result in some pretty good upside for the stock. The handle is typically when the stock has gone up quite a bit, then it goes down some, and it creates this little handle at the right side of the cup. When you see that, it's a really good signal to get in on the trade on the bullish side. So Tesla really got beat up over the last several months, with Elon Musk being involved in Dodge, and then some of their sales in China coming down. Talk about challenged trade relations between China and the United States. All of that's kind of getting settled. It looks like China and the United States are going to come to some kind of a trade agreement that's beneficial for everyone, which is what I would expect to see, because there is so much benefit for both countries to trade with each other. I just assume this thing would always get settled because it's in the best interest of both countries to do so. So that's starting to happen. The next bullish catalyst for Tesla will be the Model 2. And they've teased that a little bit, but they're coming out with some, little bit of, spy photos on the thing, a little bit of inside information about when it might be released. And it's going to be at a price point that I think might make electric cars finally make sense for a heck of a lot of people, especially folks in the city that are taking short trips, and they have the ability to charge. I think this car could be a game changer. I think it could be the next upside catalyst for Tesla to really boost their sales. I think Tesla could be a really good long. I mean, I'd be patient. I'd let the stock pull back a little bit, at least to on this one, on the TSLL, at least around to the 13 range, around there, somewhere right around 13. Take a position. And I think this could be a really good upside play right here. And I assume this is leveraged. So let's just take a look here. I think, yeah, the direction daily 2 times ETF. So the thing to keep in mind on these leveraged ETFs, and this is really, really important, if you trade them a lot, you probably know this already, but to get the leverage, they use futures, and futures have a cost. So over the long term, the cost of the futures kind of drag these ETFs down. So what they're really good for is short-term trades. So if you're going to be in the trade for 2, 3 days, maybe a week, I think it can work out really well on a big move in the stock. For a longer term position, like a month or so, I don't think you want that futures drag pulling the index down. But right now, this thing is setting up for a good bullish play to the upside. It's actually looking pretty good. Do we have anything else, David?
Um, yes, someone else asked about Tesla, so I think you covered it that, but if you have
Well, let's
any
just take
additional
a look
comments on
at the
Tesla
stock
itself. Okay.
compared to this. Yeah, see, the stock is actually having a much more dramatic move than than that 2 times leveraged ETF, and I think that's because of the futures cost. So here it looks like I've already done some work on Tesla. Just taking a look at it, it's got a really nice base in here, just like we talked about. Broke this little downtrend right here with a huge up bar, and then came down again. This resistance right here turned out to be substantial. But when this resistance was broken, that's really your signal to go long. And it's the stock has popped up. I think what we're looking here for with Tesla is a little pullback. We got it today a little bit more. I'd really consider getting in on the stock on the long side.
Okay. All right. Next is Uber.
Okay, let's take a look. Oh my goodness. Look at this. So we could pull up a longer chart of Uber, but going back to actually November, we are looking at highs that we haven't seen since November. I mean, we're looking at highs we haven't seen for the entire length of this chart. I could take a look at a longer term chart, but we've probably got enough right here for what we need for the trade. So if we were just to draw a simple line, and you'll see that a lot of what I do with technical analysis is fairly simple, and there's a reason for that. And the reason is that technical analysis is a vote. It's a voting machine, and the more simple technical analysis you can do, the more likely more people are looking at it and acknowledging it. So if you have a very simple uptrend, if you have simple support and resistance, it actually more people that are out there trading, more people that are out there looking at the stock agree with that. If you have some really esoteric, kind of really nichey technical indicator that you look at, that's great. And if it works for you, even better. But a lot of people aren't seeing it. So when I'm quickly analyzing charts, I'm looking at obvious support and resistance. I'm looking at this MACD going higher right here. The histogram is all in the green. These things aren't even close to crossing over. And I'm looking at volume that is just kind of continuously surged higher on the on balance volume. So this is a great bullish stock. It's performed really well. What I would expect to see right here, and we're actually seeing a little bit of it, is a little bit of a pullback. So if you look at the range of the stock, and I realize these highs and lows aren't perfect, but if we were to just draw a channel right here, you would see that Uber is at the very, very top of its channel. So although this is a good bullish play, obviously there's a lot of people out there that think that Uber is a good stock to get into and invest for in the long term. That's what's driven it higher. This probably isn't the best entry point right now. I would expect to see a return somewhere, at least to the middle of the channel, if not towards the bottom of the channel. And if you don't think that can happen, I mean, as we've seen, we saw a big downturn here after a peak, nice climb, another downturn actually below our channel that we've drawn, another move higher. But I wouldn't be surprised. It's just amazing how news or fundamental information will come out and make a stock do what the chart indicated it was going to do. It's kind of fascinating if you've ever noticed that. So although it looks like a good play, it looks bullish, I would wait for some retracement back inside this channel before I took a position. And also I have to say that all of this is based on your time frame. So if you're looking at getting in for a day or two, of course that's a different consideration than longer term. But longer term, I'd definitely wait for some retracement on this. It's kind of hitting the top of its peak, top of the channel. What else do we have, David?
Um, let's see. Dell.
Okay. Oh, Dell Computer. Now, if you've been looking at a few of the charts that we've been reviewing here this morning, you'll see a pattern, and this pattern very much reflects the overall market. So we have, in this case, the market really peaked in February, in late February, and then really dropped on a lot of the tariff announcements and Liberation Day, and now we're seeing this huge rebound from that. But with Dell, it's a little bit different situation. Dell had a huge gap back here. You can see it gapped down quite a bit right here. And that was back in early December. And I would assume, without going back and looking, I'm assuming that had to do with an earnings announcement or some kind of news on the stock that was not real beneficial. Ever since then, the stock has essentially been making a series of lower highs and lower lows. And that is the classic definition of a bearish pattern. Now, we saw a nice V bottom here with Dell, and we saw it going up, and that's great. But the uptrend isn't really validated and verified until you see this high broken to the upside. That's exactly what we saw with this gap. So this is the gap that we saw Monday morning. This is this week's trading, these 4 green bars. So Dell is kind of catching fire here. This is a good time to get into Dell. And, the perfect time would have been right when you saw this gap up and this break above this high right here. This is really your best entry point right there. At this point, after some minor gaps higher and 3 really big up days, I would expect to see a little bit of retracement. Little bit of retracement on Dell to really kind of match. If you were to draw a trend line here, which, when I draw straight trend lines, people say, well, you should be using a moving average. You should be doing this and that. Isn't it amazing how often the bottoms on a stock's movement exactly match a straight line? This is one of the reasons I use them. It's a simple support indicator, but it's just amazingly uniform. So here's an example. So I would consider entering Dell as it gets much closer to this uptrend support line. I think it's deviated from it. It needs to retrace and relax a little bit. I think we're also seeing that in the overall market, where the market might need to relax a little bit and come down a little bit. It'll find reasons to do that. There'll be some little blurb in the news that kind of casts some doubt. You'll see a little pullback. And in a bullish market like this, when things are going up and things are looking a lot rosier, these trade deals are happening. There's geopolitical agreements and treaties just kind of sort of happening all over now with the big diplomacy that we're seeing in the Middle East and possibly in Ukraine. We could see a lot more peace in the world, which I think the market loves. And I think we're going to see a lot more trade agreements and trade equality going on that really benefits America, brings a lot of capital here to this country, brings manufacturing here. I think this is a good time. I think this is a good time to look for these pullbacks and get long when you see them. What else do we have, David? David, are you there?
Yeah, sorry. I was muted for a second. Riven, Rivn.
Oh, Rivian.
Riven, yeah.
Yeah, Rivian Automotive. So so I just, a personal note, I had money down on a Rivian almost from when they would first take it, and it was for a quad motor, long range, 400-mile range. And they finally came out and said, well, we're not going to do that. We're just going to give you 2-wheel drive with the longer range. And I canceled my order. So I've been kind of following Rivian ever since. I think it's an interesting company. Obviously, this is a very bullish setup here. So Rivian is just, if we were to draw our lines once again, we'd see a fairly good uptrend here, and then this thing just steepened up kind of to the max. Um, Obviously, this has a lot of momentum. We're seeing it shoot higher. The MACD is going up. The histogram is going up. The volume is going up. This is very, very bullish. I think Rivian's had some good news lately, some beneficial news. I think that's helped them. But I see Rivian as more of a almost like a day trading, taking advantage of this momentum, taking advantage of the stock shooting higher. As soon as it starts to reverse, maybe get out of the trade. When something's going up this far, this fast, and it doesn't really have the fundamentals to back it up, it makes me a little nervous. So it would not be surprising to see a retracement back towards support here. We could see a little bit higher, but you're really on thin ice here when you've had this much movement higher, and we're still going up. I mean, the air is getting thin up here, and a lot of the buyers are already in. Would not be surprised to see some retracement. That said, once you see the retracement, it might be a great time to get involved. Rivian's an interesting stock. One of the problems with it fundamentally is they take so much capital. It takes so much, several $billion actually to get the company going, get their manufacturing facilities up. And I kind of wonder how much actual profit the company's going to make in the future. They got a lot of competition coming into the pickup truck space. I noticed Scout, the new division from Volkswagen that bought the old Scout Harvester name, is coming out with a pickup truck as well, all electric. So I see a lot of Rivians on the road. I know people like them. They get really high ratings, but they've got some competition. So we'll see what happens fundamentally. I also just want to show you real quickly this last trade. This is sort of the chart we started off with, and we do 2 trades per week. And this, I just wanted to show you an example of, this is Costco's, which we did this past week. A lot of our trades work out really well and they go in the direction we think they will. I wanted to show you this one because it kind of didn't. So we got involved in the trade when it was kind of skittering along the top of this uptrend line, this uptrend support line. And since then, you see this big down red bar where it broke it. We got another red bar, and that's kind of heading towards our 2 strikes here. And then we have a nice green bar today, and that looks good. The reason I wanted to point this out, and we collected a really nice credit here. Once again, 25 to 30% for just 7 trading days. And if you keep repeating that, you'll see this big accumulation of cash in your account. It still looks like we're going to do okay. So this is one that went against us. And if it just Costco finishes above this line right here, we're going to make our full profit on the trade. And that's just at tomorrow's close. So really forgiving strategy. I want to give everybody that's on the call a chance to take a look at it and get involved. I've got a really nice educational package and a month subscription. It's really cool. And it's at introtocashflow.com. Just take a look. It's probably it's really, really inexpensive. I mean, it's a really cheap way for you to just take a look at it. It's less than $100 and you get a nice education package. And actually I do 2 trades a week. So you get the entire month of trade. So take a look at that, Intro to Cash Flow. And I don't know if we have time for one more, David, but I'm game if we do.
Yeah, this is the hour presentation. So
Oh, it
yeah,
is. I
you
thought it
you
was a half an hour.
no
Okay.
that
I was getting ready to wrap up there and we still got some more time. So that's
yeah.
fantastic. Yeah, that's great.
Um uh just yeah, NVIDIA, Palantir, and Google.
Okay. That sounds good. If you're like me, you were kind of salivating for a chance to buy Nvidia cheap because it's gone up so much over the past few years, and you just don't get a chance to buy Nvidia when it's sold off. Well, we pretty much got it here. I mean, since December. Well, I guess these 2 highs are about the same. So I would say since mid-January, the stock has been forming a series of lower highs and lower lows. It bottomed here on April 7th. And one way to catch that bottom or suspect that bottom was there is at the magnitude of the up bar here, and also on the volume. So except the on balance volume here was just going sideways at that time. You really didn't have a good indication that this thing was going higher until the volume really started to rise. And that was after this dip right here. So if you missed this one, I can understand why you would. The stock's been going down, down, down. The market was pretty scary just a month or two ago. And then we saw this pullback. And then you saw, here's your indicators where you really got a clue that this thing was happening. So you had a bottom, a jump, a gap here, and then you had this spot right here where the MACD turned higher. And not only that, a day later, right up here when you had this gap, the MACD, the histogram actually turned green. And and here's your big telltale, you started seeing volume coming into NVIDIA. Since then, since this gap, we've seen a very consistent run higher. This week, of course, we saw this gap, and we've seen this on a lot of charts. So this is a lot of reflecting the overall market. We saw this gap here. We saw another gap Tuesday morning, another gap Wednesday morning, and a very slight pullback today. With this kind of extension, I would expect to see a little bit further pullback towards this uptrend support line. But NVIDIA is a great play. If you follow NVIDIA, you know that they've got earnings coming out this month. It's always a little bit dicey trading into earnings. But if you're willing to take that risk, I think there could be some further upside. I think we might see some caution going into earnings, so you might see a little bit of a pullback. But I think NVIDIA is a fantastic long-term trade. One of the reasons NVIDIA went down is people started to lose faith in the whole AI narrative because the AI companies weren't particularly profitable. Even within Microsoft and Google and the others, their AI divisions weren't really producing any revenue to speak of. And so people started losing their enthusiasm, and they sort of vicariously took that out on NVIDIA. And not only that, but we had a sort of a bearish narrative going on in the market for the past couple of months. So we saw a downtrend in NVIDIA. I think if you've read about NVIDIA, you read about what's been happening lately. Just yesterday, I think it was, they announced with Trump's trade and diplomatic mission to Saudi Arabia, they announced a huge order of NVIDIA chips, just thousands and thousands of NVIDIA chips. NVIDIA is alive and well. They're very good at what they do. They're the only ones that really do what they do on the scale that they do it. I think NVIDIA is a fantastic long-term trade. I think if you waited for any kind of a pullback here to fill in some of these gaps, I think you'd be handsomely rewarded on an upside play. David, what's our next one?
Palantir,
And what's the ticker on that?
PLTR.
PLTR. Okay. Oh my goodness. So we just made a brand new high. Broke double resistance here. So this is significant resistance. Broke above it on good volume. We've got great on balance volume coming up here starting from this big green bar right here. We've got a steady increase in volume. Every day there's more looking like, with some just really short downturns here, there's more positive volume, more buying volume than selling volume. We've got a histogram that continues to go up. It stays on the green. We had a little pullback here, and that was very quickly bought. Palantir looks bullish to me. I mean, it looks like it could definitely move higher. This looks like a good play. We've seen the retracement. We've retraced to support here. I think anywhere in here is a buy. And I think there's a very good chance you'll see this general uptrend that we've got right here. I think we'll see this uptrend continue, especially with everything that's going on. You can't separate these stocks from the macro environment. You can't separate them from what's going on in the world. And what we're seeing here, and it's such a contrast to just 6 weeks to 2 months ago. I can't believe how many reports that I read that this is the end of the world. our economic system is going to be destroyed. These tariffs are going to ruin everything. Trump's an idiot. I can't believe what this guy is doing. And we're seeing all of that narrative reversing right now as more countries start coming in. And you're going to see this headline news where more countries start coming to the table and coming to tariff agreements with the United States, which will benefit the U.S. It'll not only give us revenue, it'll move some manufacturing here, it'll make things a little bit more equitable, and trade will go on as before, but in a way that benefits the U.S. economy. And the U.S. equity markets have always been the go-to for the world. We have good, transparent markets. We have good checks and balances. We have an SEC that keeps an eye on things. China can't say that. Some of these other markets can't say that. So a lot of money finds its way to the U.S. markets. And what all these trade agreements are doing and all this positive news that you're now seeing, that just encourages the world to invest in U.S. markets. So it's a good time right now. Some people are starting to say, I get a chuckle because sometimes it's the same people that said the world was coming to an end 2 months ago. Some of these same financial outlets are saying we could be entering a golden age here. So I think the outlook is bullish, even though we're going into summer, which is typically the summer doldrums. A lot of these stocks have, like Palantir, which is a great company, have been really beat up, and now people are buying, and you see this break of resistance, a new high, little pullback to that support level. That kind of gives the green light for this thing to keep on going. So Palantir looks bullish. It looks good. David, do we have another
All
ticker?
right. Google.
Okay. And is that just Google? Because there's several Googles. I'll just do that one.
Yeah. Um,
Alphabet. Okay, interesting. So look at the contrast between Palantir, the stock that we just looked at, and Google. So Google is not anywhere close to making all-time highs. Google is just coming off of really a pretty severe downtrend. So if we were to just draw an overhead resistance line on Google somewhere in here, this downtrend, and we can see that in the MACD, we can see it in the on-balance volume. It just started to turn up for real on about the 19th of April, which was only, about 3 weeks ago, not that long ago. And it did some gaps here, real positive, but then it retraced, went up again, and then this huge down bar. So there's some doubt on Google. It's starting to head up again. What I will say on Google is you're starting from a fairly low point. So with Google, the spot that you want to look at, I'm actually going to bring this down a little bit. The spot you want to look at is this 165.33. We'll just draw a line across this right here. And we want to see that get exceeded convincingly. So we did pop above it, but we retraced yesterday to close just about at that line. The stock is trying to get above it right now, and it's selling a little bit back towards this line. So this is obviously right now in this time period, in this several week time period, this is important resistance. So what's nice about this is we have a very clear buy signal. When you see Google starting to exceed this, and it is on top of it right now, it's a little bit above it. So this is a good indication. We get another positive day tomorrow. That might be a good time to go long Google. We've got some minor resistance up here at 170.54. And then there's minor resistance as we go up. But, really, we've got a lot of room here between the current price of 165 and this kind of peaky level up here above 200. There's a lot of movement there in dollars, and there's a lot of movement there in percentage. So we don't see the obvious bullishness that we saw with some of our other stocks that we've looked at today. Google is a little slow to the party. And I assume, their big revenue driver is advertising revenue. And so I assume that's part of the problem here with Google. Why they're not participating quite as much as the other stocks, but it looks like it's getting ready to break out. We have a nice buy signal in this area. take a hard look at Google. It looks like it could be a good one as long as this uptrend remains. Yes, David.
ACN.
Okay, ACM. Okay, once again, okay, so this is when you're going to trade, the best chart that you can find, if you want to minimize your risk and maximize your opportunity for gain, is a stock that's just heading higher at a very steady pace. So this is a chart that I absolutely love. Um, yeah, you have your down days in here, but your down days just come right back to support and almost immediately pop higher. We had a gap on Monday. I mean, just a huge percentage of the market gapped higher. It was the up day for the S&P 500 on Monday was the day finished, I think, at about a 3.4% increase on the day. To have close to 3.5% pop higher on the day is gigantic. We like literally never see that. That was like the biggest up day we've seen since in like 5 years. In a single day. So you're going to see when you look at these charts, and we've seen this already, we're going to see a lot of stocks that gapped higher on Monday. That's this gap that you see here. As you can see, what I love about ACM is that we got a pullback. It's very orderly. It just didn't go to the moon with several more gaps higher, where it really makes you nervous to start trading after that. This one retraced. We had kind of an indecision day here, a little bit of bullishness here, a little bit of bullishness here. This is a great stock to buy on any pullback. And even if somewhere in here in this range, this like, I don't know, about 106.50 to 107.70, anywhere in that range is good to buy. If you can get a little bit lower, it's obviously better. And a lot of it depends on your time frame. If you're buying this stock outright and you're planning on holding 2 years, 50 cents one direction or another doesn't mean much. If you're doing an options trade, a short-term options trade, it actually does make a difference. So I'd wait for a slight pullback, but you don't have to wait for much. And like I say, I look at a lot of charts. I'm looking at charts all the time, every week, to find out, the best two plays we possibly can on Tuesday night. And these are the charts I like the best, where it's just steady Eddie. They're not going crazy, but they just seem to climb and climb and climb. If you want confirmation of that trend, you have to look no further than this on balance volume here. This volume, we've looked at a lot of charts, and most of the time they're looking like this. It's kind of up and down and up and down. Look at this volume. What this tells us, this is so darn steady, you almost never see this. What this tells us is the institutional traders and the institutions that really put a lot of money to work are just inching into this stock. They're buying it a little bit of it at a time and just driving it higher and higher and higher. It's a beautiful play. It's very rare to see a stock like this just drop, like a rock, unless they come out with earnings that are horrible or whatever, and you can always see those dates, so you know when that's coming. But this looks like a good one, an
Oh, okay.
excellent.
I and sorry, they actually said ACN, but you seem to like that, so I
Well,
let you go
yeah,
for
we
it.
found it. We found a good play here, even though it wasn't suggested. We found a good
Yeah.
stock, so that's okay. So let's just take a look at ACN,
Okay. Yeah.
and this is Accenture.
It looks pretty
Once again,
similar.
a really, actually a really, really nice stock here. I just love this consistent uptrend. Once again, we saw this big gap higher coming off of a pretty well-defined trend line. We don't have to see much retracement to get back to this trend line. So this is sort of the last, after this huge up bar on Monday, we're starting to see this move being digested. I wouldn't mind seeing a little bit more retracement, but this is once again one of the steadiest stocks. You look at this on balance volume, you've got a really nice down here, a really nice, even, uniform, consistent buying of the stock. We see the MACD trend lines going up. We see the histogram in the green. We see that we've filled this gap here. That gap actually got filled here, but we've exceeded that high. That's an important high right here. And this is now new support. So you can see the stock kind of coalescing around this new support. When you see these two trend lines cross, a really powerful horizontal support line and a uptrend support line, right in here seems to be a really good place to buy at the convergence of these two support lines. Often we see like this, a gap higher where the old resistance turns into new support. That's broken. And then we see this consolidation where it comes back down. And then right in here is a really good place to buy. So, I'm glad we looked at both tickers. I'm glad I kind of misunderstood that one because we've got two now, ACM and ACN. From a technical standpoint, look absolutely beautiful. Some of the others that we looked at where they really gapped higher, and we have 4 days of gaps higher and upside, I'd be really hesitant to take a position there. They're really, really ripe for some retracement. But I like these trades where you just get on the escalator and you ride it higher. They're beautiful. What do we have next, David?
TTD. Another one
TT, and is that D as in dog?
Yeah.
Okay. And that's the trade desk. Oh, wow. Big movement here. So this is not representative of the overall market because these 4 days you see this week, well, this stock actually gapped up between Thursday and Friday, had a pretty good continuous move on Friday, retraced most of that gains, but the very next day gapped up again. So this is one of those stocks that's had, like I say, a huge move in a really short amount of time. And you would expect after this, and this is very typical, to see some retracement. But what we're seeing here, one of the first patterns that we looked at when we first started out today is this sort of cup and handle formation. And we formed a really nice cup. What this would do if we had a little bit more retracement on this, it'd form the handle that we're looking for. And then I suspect this stock is going to shoot higher. And it's got a huge gap to fill from, oh my gosh, we've got from 85 all the way up to 100, almost 118. A huge gap to fill here. I think we see a little bit more retracement as long as, and this is the big caveat, as long as the news stays good on the stock. But this is a very interesting play. Whoever brought this to our attention, I want to thank them. This is interesting. This looks like a really good trade opportunity setting up. We have some retracement. I would say anywhere from here to its current price. So that's about 70 up to about 75 right in there. I'd say anywhere in this range would be a good place to start positioning for another move higher. I think this thing has some great upside potential, particularly if you're a trader and you're looking for some really good short-term gains. Actually, long-term, I'd have to take a look at the fundamentals, but long-term, it could be good too, considering its uptrend here just since the last month or so. David, what else do we have?
I think you covered everything that people asked for. Oh,
Well,
IWM. I think I missed that one.
What is it?
IWM, the Russell.
IWM. That's the ETF for the small caps.
Yeah.
For the Russell. Okay, I'm a big small cap fan, and the reason is because they have outside moves on the downside when things are going bad. And as soon as things start getting positive and traders start getting more excited about the market, the Russell always has outsized gains over the S&P 500. A lot of people refer to the small caps as the canary in the coal mine because they're sort of the advanced indicator. A lot of money stays in the big caps even when things are getting dicier because they're considered safer. And just the opposite is true with the small caps. Is as soon as things kind of turn down, people want out. I mean, my goodness, let's just take a look at this incredible downtrend here that started way back at the beginning of December. And, we just have this just sort of overall downtrend. Even though it managed to get on top of this resistance, we still saw, we couldn't make a new high. We still saw lower highs, big drop down here, pop back up to resistance. And then what you can obviously see here is a capitulation sell-off. This is when nobody wants to be in these stocks anymore, and they finally just dump everything they have. It's that point that you're really looking for, where there's no more sellers left. And when there's no more sellers left, all there is buyers. This we've gotten some really big clues as to when to get in. This huge up green bar here was a clue. We got some immediate retracement. We tested it down here, and then this next low was really the spot where you could get in. But one of the reasons I use the indicators I do is these volume indicators. The low point for volume on the IWM was actually before this big green bar. It was actually the previous day, or actually even, the previous day was the lowest volume. And since then, and this is, on balance volume, once again, it's a relatively simple indicator. It just adds up the bullish, the positive volume on the day, subtracts it from the negative volume, comes up with a number, and then you get a moving average. And what you can really see with that very quickly is if a stock or an ETF is under accumulation. And obviously, the IWM is under accumulation. You can see it in the volume. You can also see it in the stock price. This is another classic, very much representative of a lot of the stocks we've seen. We would expect that with an ETF that really reflects the market as a whole. But you can see how much more dramatic it is. This move right here, from this past Friday to a Monday, is actually bigger. It's a bigger move percentage-wise than the SPX. That's what we'd expect to see. It peaked on Monday morning, or Monday during the day, and then we've been seeing this retracement ever since. So this is a classic setup for a bullish entry point. What we're looking for on something like this, when you see a gap and then you see it start to retrace, is we're looking for a trade back towards this uptrend line. And if you see the IWM come back towards this uptrend line, this is a great place for a new entry point. And what you'll see there is with another day or two of retracement, you'll see this MACD start to turn over, but it'll never cross. So the confirmation is when the MACD crosses. Like, you'll see it back here. You'll see it here. Oftentimes you'll see, like on this bullish crossover, you'll see the histogram actually go from red to green. Here you'll see it go from green to red. And you'll see a rollover, a slight narrowing where these two lines start to come together, but they'll never cross. And then you'll see another, once it hits this support, we'll typically see another big up move, or just a gradual move along the uptrend support line. So I love the IWM and I love the Russell because it's a good, just at a glance stock to see what sentiment is. As soon as things get dicey, people dump the small caps. As soon as they think things are going to get good, they buy the small caps with both hands, because that's really where the alpha is. That's where you can really outperform the market. The S&P 500 is with the small caps. And so when things start looking good, money rushes in. I also think another bullish catalyst we'll see this year, which is really relevant to the small caps, is I think now that we're seeing trade deals getting done and we've seen some inflation numbers that are lower than expected. We just got an inflation report, I think it was yesterday or the day before, lowest inflation since 2020. So when you start seeing these lower inflation reports coupled with trade agreements, and when we have trade agreements, that will, and even though the tariffs might be a little bit higher than they were before all of this started, they're going to be way lower than these, 165%, 125%, the really outrageous tariffs that we saw during the negotiation phase. So once these tariff deals are kind of in place and we see inflation coming down, I think what we're going to see is the Fed have a green light to start easing off on interest rates. And interest, if you want to know what really drives the small caps and you want to know what drives the chart we're looking at right now, it's totally interest rates. So a lot of small caps have to borrow to fuel their growth. They're not real revenue positive yet. They don't have huge amounts coming in. They don't have access to the really low cost of credit the big caps have. So when interest rates are higher, it really hits the small caps hard. when the market gets any whiff that interest rates might start going lower, like kind of what we're setting up for right now, you're going to see a big tailwind for the small caps. And that's really well represented here with the IWM. So I'd really consider buying this on a pullback to support. I think this could be a really good long-term play right here. Probably could be good for the rest of the year. Listen, we do have just 5 minutes left. I just want to let you know that we do have a kind of a neat deal going on just for the people that are watching this webinar, and that's at intro-to-cashflow.com. And it kind of shows how we trade to get money coming into your account every week. So you have that fuel to do your more speculative trades. If you do directional trades, if you do straight options trades, it's nice to have cash showing up in your account every week. And so we have a method for doing that that's really effective. It's really safe. You don't have to watch your trades so closely. You never have to worry about the exit. We just usually let them go to expiration. Really cool kind of a strategy. I'd love for everybody to do. It's nice to have something in your portfolio that you don't have to worry about so much if you're an active trader. And this is really good. So that's at intro-to-cashflow.com. Take advantage of that. I priced it so low anybody can get in there and just test it out and try it. David, do we have time for one or two more?
I think we have time for one more. Shop, SHOP.
So Shopify, anybody that has an online business is kind of familiar with Shopify. Shopify is a huge moneymaker. They enable online businesses to function, to take payments. They're really the premier software platform in that arena. And we just got a buy signal on Shopify, which is this 111.02. We just popped above that, then we pop below that. You often will see some flirting around resistance before it really pops higher. Shopify, I would say last week was actually going down, and then the news that we saw that with China, which will affect Shopify quite a bit because we do so much commerce with China, and a lot of people have online websites that sell things that are sourced in China. So that directly affects Shopify and their volume. So when everybody thought that, they thought Chinese negotiations were going to happen on the tariffs, but they thought it was going to drag out 2-3 months as everybody's trying to save face as this dance happens. And then when it was announced that the Trump administration was actually going to Switzerland, they actually did this over the weekend to Lake Geneva, and they hammered out the bones of a trade agreement with China. It happened so much faster than everybody was anticipating. We saw a massive gap higher in Shopify. So this is a way bigger percentage gap than what you saw with the S&P 500. So the S&P 500 gapped up about 3.5 points on Monday. As you can see, Shopify started off at close to 95, a little bit below that. And they at one point in the day, they were up at 106. They closed the day at 104. So you're looking at 8 points there on a $95 stock. That's about a 9%. That's 3 times the increase that we saw in the S&P 500. That goes to show you how much weight traders put on the upcoming the agreement, the tariff agreement with China as it pertains to Shopify. Just a huge amount of weight. The stock gapped up again on Tuesday, gapped up again on Wednesday, had a really nice up day on Wednesday, broke this high. And then actually they're still, even though traders were trying to take profits, we've seen retracement on a lot of other stocks this week or today. And this one is still kind of a green bar. And